All righty. Well, welcome everyone to NSTA Flash Webinar Series, The Turbulent Insurance Climate and What You Need to Know for Tuesday, June 10th at 10:30 a.m. I'm going to kick it over to our moderator, Kurt Mackison.
All right. Good morning, everyone. Welcome to our latest in the NSTA Flash webinar series. We have a great set of presenters today with Tim Weaverling and Mike Kuiros from our partners at RWR Keystone Insurers Group. So I just want to get started with a few announcements before we get to the presentation. First is the NSTA antitrust statement. Antitrust laws apply to trade associations and their members. A free exchange of ideas on matters of mutual interest to school bus entities is necessary for the success of all NSTA meetings. Such an exchange of views is essential to successful operation of every trade association. It is not the purpose of this policy to discourage the exploration in depth of appropriate matters of legitimate concern to meeting participants. To ignore certain antitrust ground rules, either through ignorance or otherwise, is to create a hazard which prudent business persons cannot afford. NSTA believes that fair and vigorous competition is essential to the maintenance of this country's free enterprise system. In furtherance of this principle, therefore, it is NSTA's policy to conduct all activities in strict compliance with the antitrust laws. NSTA expects its members to adhere to the antitrust laws regardless of where they are located or do business. NSTA expects that each and every one of its members understands and follows the antitrust and competition policies and laws where they are located or conduct business, including within the confines, auspices of NSTA. Just a few housekeeping announcements before we get started. All attendees will be placed on mute for the duration of the broadcast. There is time built in at the end of the webinar for your questions. If you do have questions throughout, please do not hesitate to use your command center questions box, and we will ask the question on your behalf to the panelists. You can do that throughout the webinar, and if it's appropriate, we can get it answered at that time, or if we think it's better served to go throughout the webinar, we'll ask it in the Q&A section. So just want to make sure everyone's aware that the NSTA Flash webinar series are overseen by our Manufacturer, Suppliers, and Technology Committee. We would like to invite anyone interested in participating on this committee, that the committee does meet the second Monday of each month at 2 p.m. Email us at info@yellowbuses.org to join. There are a number of things that the committee does, including our webinars, our podcast, as well as the vendor partner OEM speed networking. Just a reminder that the 2025 School Bus Driver International Safety Competition is fast approaching. It's being held June 28th and 29th at Hayes CISD, that's just below Austin, Texas, with the host hotel being the Austin Marriott downtown. Registration is open and the room block is fast running out. So if you're engaging with the safety competition, do make sure that you are able to reserve your room. And then the 2025 annual meeting and convention follows shortly thereafter in July 20th through 23rd. The Westin Copley Place on the Back Bay of Boston is our host hotel. Room block is closing down on June 27th. So you want to get the NSTA discounted rate, you'll have to reserve your room by the 27th, or you could get shut out. There's only a handful of rooms in the room block remaining. I'll also advise that if you are running into difficulty, if you're extending your stay and finding a room, please just continue to book your room through the NSTA block, and we'll assist you with engaging with the hotel on any extended room block. So in other words, you'll want to go on the portal and reserve your room for the primary days of Sunday, Monday, and Tuesday. And if you want to extend and have a difficulty, just let us know. The key thing is that you do get a confirmation number for your reservation. So with that, we're always available to you at info@yellowbuses if you have any questions. And now, like I said, we have a great presentation in store for you. So I am going to turn it over to a good friend of NSTA and partner over at RWR Keystone, Tim Weaverling.
Good morning, Kurt. Thank you. And thanks the whole entire NSTA staff for helping us put this together and be able to be with everyone this morning. I want to talk today first. Well, we can skip to this, but we're going to try to do this a little challenging, or in a more humorous sense to start. Is Mike and I are going to call ourselves the coverage crusaders. He's good cop, I'm bad cop, so he's the risk knight, and I'm the binder bandit. And I think we could all probably agree that right now insurance is a bit of a bandit at times when it comes to what your premiums look like. So going on to objectives, what we want to talk about today is summarize the current commercial auto market, and just kind of keep this conversation a little higher level. But we are going to dive a little into the weeds on some of the topics. Talk about hazards and exposures that contractors may be subject to daily. Review operations of the contractor and how it may be looked or perceived by an insurance carrier, and talk about factors that will help promote your account to a carrier while making their operation safer. That's, I think, going to be where you really will see maybe some value out of today's presentation. Document and be forthcoming with obstacles related to what the contractor faces daily, and then ultimately share information on the importance of working with an experienced agent that works with school bus contractors and tries to specialize, or not tries, who does specialize in that type of business. So with that, I'm going to turn it over to our good guy, and Mike, and he's going to kick things off.
Okay, thanks, Tim. So most of you guys know who I am, but my name is Mike Kuiros. I'm the Director of DOT and Fleet Services here at Keystone and RWR. So one thing that we want to point out is, as school bus contractors, you guys have to do a lot, with all the background checks and everything that you guys consistently do to make sure that, you're safe and the commodity that you're hauling is safe, which is obviously children. So picture this, you guys are doing all the right things, such as reviewing the routes and stops. We're reviewing the existing policies that you have in place, and then we're also developing emergency response plans. We're purchasing our vehicles with safety in mind. We're using the latest technology, things such as like the collision avoidance systems, telematics and cameras, and then we're also hiring experienced drivers. But yet an accident still occurs. So that's kind of what we're here to talk about today. Is we know that you guys have a lot in place. So what can we do above and beyond that to even make you more attractive to the marketplace? So one thing that I'd like to point out is the controlling of accidents. Now, this is called the Heinrich pyramid. And basically what they say is for every 300 near misses, you're going to have 30 minor accidents and 1 serious accident or fatality. Now, a near miss is something that could have resulted in an accident, but did not. I give a stupid example from an incident standpoint. There's a box in the middle of a hallway that you continuously trip over time and time again, yet you never move it until that you do trip over it and get injured. If we just would have moved the box, that was a near miss. It's something that could have resulted in an accident, but didn't. Hopefully it would have taken away that accident altogether. So for every 300 near misses left uncontrolled, meaning that we're not looking at them, we're not discussing them as a group, we will end up with 1 serious accident. So having, a good near miss program within your facility is a good thing. It gives your employees a reason to speak up, gives them a voice that they can basically fill out stuff and say, this happened to me today. And if it happened to them, most likely it could happen to somebody else within the company. The root cause analysis. So, basically what the root cause analysis says is what we're actually looking at is not what actually is. If you're looking at what this image that you see here, the weed itself is a very small thing that you're looking at, but the roots of the problem are much larger. So, it's not always of just what you're seeing on the surface. A driver gets into an accident. Well, what was the issue? Maybe look at it like an hours of service piece of it. Were they fatigued? Were they not feeling well this morning? Do they need more training? There's a lot of things that we should be looking into and not make it so obvious of that single issue that we see when an accident occurs. Basically, get down, do a true root cause analysis, and find out the reason the issue happened, and then we're able to fix it. I really like this slide a lot because, one thing I know at this point over the last few years, most people are tired of hearing about the hard market. One thing that we're going to try to do today is try to make you guys understand it a little bit better, because that's all you hear, hard market, hard market. So we're going to talk about some of those contributing factors. But one thing I like to say is put yourself in an underwriter's shoes. And you could do that very easily because everybody on this call has personal insurance, whether it's your home insurance, whether it's your vehicle insurance. And I always say, obviously, if you have personal auto insurance and you continuously wreck your vehicle, that's going to put you on the right side of this bell curve, basically. It's going to show poor losses, and ultimately, you're going to feel that in your premium. So what I like to say here is put yourself in an underwriter's shoes. What they try to do is shove all those submissions that they have in the middle of that bell curve, okay? Things that are going to put you on the right side, which obviously you're probably going to fill in your premium, are things such as losses, which are going to be on your loss runs, high dollar amount losses, and some of your roadside CSA scores, which we always refer to CAB, which is one of the systems that we use. But any of that stuff, poor MVRs, anything that's going to make you look obviously bad. The things that we're going to put on the left side of that is going to be things like we're going to talk about today, extra things that we could do beyond of what we're already doing to make you the most attractive that you possibly can be. Now, since you guys are doing a lot already, there's things that we need to probably be telling that underwriter of the things that you're doing. Without telling the story, they have no idea. The way I look at it, an insurance underwriter has a stack of submissions on their desk. What's going to separate your submission from the rest of the submissions? So that's kind of what we're going to discuss today, is basically putting you in that best light possible when it does come time to market you to the insurance market. And now I'll turn it over here to Tim to talk about some of the nuclear verdicts. I know a lot of us have heard that term before, and what that actually means.
Yeah, thanks, Mike. This I don't think is unfamiliar to most of us, and especially the ones on the call today. But nuclear verdicts are having a major impact on the insurance industry. And what we mean by that, some of the different ways that we see that, if you're not familiar with the term, is social inflation, litigation tactics, and just commercial auto vulnerability as a whole. But if you think about the social inflation portion of it, that's what people are putting out there. That's what our peers, our social media, things like that are put out there, that just starts to get into people's minds. They're thinking, they see these claims coming through, they see these payouts, and like, okay, well, if this happens to me, I might be able to benefit from this as well. Not saying some of it's not justified and in a very egregious accident, but a lot of it's usually inflated beyond what we would perceive as normal. Here's something litigation tactic that I think really hits home is plaintiff attorneys they're kind of taught to make the jurors become societal guardians, which that means they're protecting the claimants. And then you take that, and then you have third-party private equity firms coming in and starting to fund these defense cases, because like every commercial you see on TV with attorneys will say, insurance carriers are just going to drag it out. They're just going to leak your bank dry and get you to settle out. Well, how they're fighting that now is bringing in these third-party litigators. They'll say, we'll pay for that defense. And in doing that, the claimant is still going to lose, because one of two things have to happen. They're going to have to ask for a bigger claim, because now they're paying the attorneys. Now they're paying the private equity. They get whatever's left over. So one way they do that is by increasing the amount of claim that they're asking for. And the verdicts are just getting crazier. I know one thing that we talked about, and I guess, Mike, we can go to the next slide. We'll look at loss runs. Here's one way where we start to, as Keystone and RWR, and this could be any agent, we start to look at here's a really important document for each of you as a contractor. And are you looking at these loss runs with your agent, with your claims management team, with your safety team? And what does it mean? We want to see accuracy. We want to see what's happening with the claim, when it happened, lag time, how long did it take to report the claim? Is it reported timely? Let's look at what's actually out there, what's paid. Incurred means the total amount that's sitting on the claim right now. That could be what's left in a reserve, which means money that's expected to pay out, what's in expenses, and what's actually just been paid forward to date. Those are things that become important to you, because that's what a carrier is going to look at. Are you reviewing these? Are you looking at them monthly, quarterly? Are you having a claims discussion with your team or with your agent and staff? And our claims managers can even help you with that. What we want to do here, as Mike alluded to earlier, is we want to build a story, and we can build part of it off of these loss runs. What's your trending look like? What type of accidents are you having? Times of the day. School bus contracting is pretty easy. You could probably have them morning or evening. That's understood. But what other variables could play a part in that? And we want to help you tell that story. So that's another way we can develop this. If we go to the next slide, this is an age-old picture of an iceberg, and it's used a lot in marketing, but it is important. I think the biggest thing to take away from this slide here is indirect costs. If you see there in the right, indirect loss ratios to direct loss ratios can range from 4-to-1 up to 20-to-1. 20-to-1 impact of a indirect cost versus a direct cost. And direct costs seem pretty obvious. That's what you're paying out in a claim for the most part. But let's look at indirect. Lost productivity, because the team could be affected as a result of the loss. Is there any reputation damage to the contractor? Additional legal expenses. Obviously, your premiums could be affected. Excuse me. Does it affect employee morale? Since COVID, there's a greater delay, and this isn't any fault of a manufacturer, in receiving parts or replacement vehicles, rental vehicles. There for a while, I don't think you could find a smaller size bus or a van to help supplement your transportation. So, and obviously the driver shortage, that's become, because what happens, that driver's in an accident, is he's not physically injured, but maybe mentally or psychologically, he or she's no longer feeling ready to do that. So those are some of the things that we're going to look at too when we're talking about this. But if we go to the next slide, we're going to get into what we think is what you want to call a hard market. And if it's not on this slide, but if you're going to ask me, what do I define as a hard market? It's real easy. The binder bandit says contractors that invest in safety, risk management, culture, and have a very well-performing account. And why I say that, with little claims, they're still seeing increases in premiums. That's what a hard market means to me. And that's the truth. So what do we see? The life of an insurance cycle. If you look at that wheel, start at the top, insurers are profitable. Companies are making money. They're doing good. So then they start to write more business. They start to take more chances on people that maybe, customers that maybe aren't operating this as safely as they could, because they're being so profitable. Rates go down. Catastrophic claims start to happen, and they result in big claims. Now insurers are no longer profitable. Keep going around the wheel at say about 7 o'clock, and now rates are going to start climbing. Additional claims cause more insurers to start to leave the market, which is where we're at now. Rates go up, and we have to adjust for these claims. Now we've come full circle in this insurance cycle. And what we see, if we could focus a little more to the left, premiums are increasing. Stricter underwriting means there's more scrutiny. I could tell you daily what an underwriter would look at yesterday, they won't look at today. And it could be age of drivers, too young or too old. It could be, there's a whole litany, how many years of experience they want to see a driver have. It's become a real struggle even on the agent side to understand what an underwriter is looking for. So we're fighting that constantly. Reduced capacity means they're starting to lower the amount of coverage that they want to offer. There's carriers now that do not even want to offer umbrella or excess coverage, and you have to go out to market for that separately. When I say restricted coverage terms, I'm talking about they're adding more exclusions. They're increasing your deductibles without your request. Increased claims frequency and severity. That's something they're looking at. So it used to be you could have a severity in a claim, and it was looked at in one way, but now frequency, the more claims you're having, is there repetition in what's going on? They want to see that. Obviously, we just talked about litigation trends and their impact on the market. I think something that's really created more claims is distracted driving and risky behavior. Everyone's in a hurry. We want instant gratification, so we're going to try to get there quicker. Distracted driving, states like Pennsylvania just passed last week. You can't even hold your cell phone at a stop sign anymore or a red light. It has to be hands-free, which I don't think was a bad idea. I think it was a good thing for at least the next 12 months. It's just a warning, but then they'll have a $50 fine after that, and that's just in Pennsylvania. But we're seeing that in other states as well. Cost of repairs, I don't think that's anyone would disagree with that. It's taking longer to get parts, and it's costing more. Underwriting losses, they're picking these apart, and this goes back to the loss runs. That's make sure we're tell a story when we submit this to a carrier. When we're looking at a renewal, let's talk to them about what happened in accidents. And the bigger the fleet is, you have to break that down, but you can definitely do it in segments or watch your trending. Economic pressures, that just goes without saying. Reinsurance capacity. Reinsurance is the insurance that an insurance carrier has to buy in order to do business. That's their insurance. Reinsurers kind of drive the market at times. They'll pass off their cost to an insurance company, and then the company has turned around and pass it on to you, the end user. And then just what the regulatory environment's doing to us now as a whole. There's a couple different, there's some different types of insurance that we deal with, and they all make sense differently for everybody. So you have a traditional insurance style policy, and you also have alternative risk markets, which is a captive. So both of those make sense for different reasons, but something to traditional makes sense maybe when you have some loss sensitivity or loss profitability. I can see it both ways. But then if you're looking at a captive market, a lot of times they're going to take what you're paying now and they're going to use that as their baseline. So you just want to make sure that you're talking to your agent when you're going into this. Is this a good time for me to do this? And we can have that discussion at another time. So some of the issues, more issues in the hard market, some of these are frustrating to me as well as they are to you, the contractor. We know we have a driver shortage. Every carrier will admit they know there's a driver shortage, but yet they say, well, we don't want to see drivers without experience. Well, okay, if you don't have drivers and there's a shortage, how do you overcome that obstacle? We have to bring the drivers in. We have to train them. We're going to train them better than anyone has trained them before, because they're going to understand this segment of what business of what they're doing. So we have to we have to get underwriters to be a little more on board with that. I recently had a company say they're an ELDT trainer company. That means they're bringing in a lot of new and experienced drivers. To me, that goes back to underwriting crime. Like, are you kidding me? How many people do you think aren't using an ELD team in-house? So it's hard to, sometimes they're hard to overcome, but these are the conversations, and this is why it's important to work with someone experienced to help you fight that. Small fleets have become a problem. If you're a smaller contractor trying to get started in the industry, if you have less than 5 vehicles in your fleet, it's going to be virtually impossible, or you're going to really, really be surcharged for it, because there's like, we can't underwrite to this with this many vehicles. Seems awkward and backwards, but it's what we hear from the markets. Higher limit market capacity, and the same thing. People are being asked to provide higher limits, but that puts a burden on the market and it reduces the overall capacity. Let's think if, and I'll talk about this later, if the FMCSA is pushed to increase the interstate limit from 5 million to 10 million, that puts a burden on the market. And they don't have that capacity, because now everyone will need 10 million that's doing the interstate travel. So it's something that definitely is creating some capacity restrictions. Urban operations always seem to be a difficult task because of the propensity to claims. There's a lot more smaller fender bender type of accidents. Van fleets, this is really becoming forefront of underwriting. We know how safe a big yellow school bus is. It's the safest vehicle in the world on the road today, providing transportation. We all know that. Now we have to use vans. We're transporting special needs children, and it's not just physically incapacitated or mentally challenged. It's behavioral. It's homeless. It's bad behavior. Those children are starting to see more van transportation. And let's be honest, some of these families are using this as their own personal Uber, so their child doesn't have to ride on a bus. And it's unfortunate, because it's increasing that. And underwriters right now aren't the biggest fan of vans, and we're going to keep working on that. We got to lower those percentages, and some are shying away completely. Carriers are pulling out of the market. I'm sure no one's a stranger to this, but less and less companies are looking to write school transportation. So we got to keep that in mind when we're talking, and they're not deviating from the guidelines. They're used to, when the market's a little softer, they'll be a little more flexible, and they'll allow more things to happen. Now nope, that's the guideline. We're not deviating. If it doesn't fit in this box, we're not going to be able to offer this to you, or we're going to charge appropriately for it. So let's assess the operation a little bit. And these are just some things that, again, higher level. What's your property look like on a Google map? If you see at the top of the screen there, there's in Pennsylvania, we call it a creek, a stream, a small river, however you look at it. Is that something underwriter might pick up on? And then a standard commercial auto policy, floods included. So they're going to say, well, we're going to exclude flood. This is one of those underwriting guidelines where they're going to come back and say, we can't offer that. We used to always joke and say, if the river's rising, throw it on the bus and let it float away. Everything's covered. Can't really do that anymore. But well-lit areas, ideally, is it fenced, is under surveillance, you have cameras, parking it under trees, which could fall. All those types of things are something to be aware of when you're looking at that. And then next is, excuse me, online reviews. What are people saying about you? Maybe a child on the bus complained to their parent, and then they just start blasting you online. Something you should stay aware of, look at. And recently, what's your reputation management like? So recently we've seen there's some vendors out there that help third-party vendors to help clean these up. They can get some of that stuff removed from there. These are things that an underwriter is going to look at. They're going to look at that Google map. They're going to look at these online reviews, and then they're going to reach back out to the agent and say, hey, what's this all about? Why did little Johnny post this, or his parents post this online? And can you tell us more about it? And right along with that, next slide, you talk about your website. Everyone, if you're not doing it, try not to post it. Two things that the underwriter is going to do first when they're looking at a new account that they haven't seen. They're going to look at the website, and they're going to pull their CAB report. Mike's going to talk a little bit more about the CAB report in a bit. But if you used to do something, if you used to do motor coaches or used to do paratransit, you no longer do, update the website. So that's not something that the underwriter discovers and say, oh, well, we just haven't updated our website. It's like, we should probably do that. Put a party bus on there with a black bus with a pole in the middle. That probably is going to be a red flag for an underwriter. And we all know what that's for. So something else they're going to look at, and on the next slide, is what is your bus to van ratio? Can we combat that if you have more vans, or if you have a larger percentage of vans than you do school buses to your school buses? Can we train the small vehicle drivers the same as your CDL drivers? That's a possibility. Technology on vans, if you don't have cameras because of the student ratio to drivers, sometimes 1-to-1, we got to really consider cameras on the vans, priority 1, and GPS and all the telematics you can. That's a really important way and a really good way to help include the vans on your policy. The newer, the better. Less than 12 years. A lot of that doesn't apply because you're held to the same restrictions with your buses. So make sure you're doing the drug and alcohol testing, even on your non-CDL drivers. That's something that can be important. These things are helping boost the acceptability of these smaller, less, let's just say less safe. They're just not a school bus. And can we help out that way? Loading and unloading should be off the road. A van pulls in a driveway most of the times, and is that helpful or does that detrimental? School bus is going to be curb pickup, so it's something that you discuss when we're putting this all together. And the best way we can is the driver should have as much experience as we can. We know that's not always possible, but what's their training look like? These are all things that can help promote that. I'm going to turn this back over to Mike now.
Okay, thanks, Tim. So Tim mentioned there about the CAB report. Now, I know a lot of times when I'm talking to school bus contractors, you're not as worried about this, and I understand why, because you guys aren't necessarily getting pulled over on the roadsides a lot in the school buses. So basically, just for those of you who aren't aware of what this is, CAB report is the same as what a safer report would be. Everything, basically what this does is it just calculates all your roadside performance in any time that you went through, like whether it was a speeding violation, inoperable lamp, whatever it may be. What you're mostly going to see on this from your standpoint is going to be your terminal inspections. So if the state police come in and do a terminal inspection, anything that comes up as a violation will show up here on your CSA scores. CAB CAB stands for Central Analysis Bureau. It's just a third party, basically, that you're allowed to get a lot more information on a company than you would if you went to Safer. So there isn't a commercial auto insurance company in the United States that doesn't have CAB or something similar to CAB. And the reasons are pretty obvious. It's so that they can see what your roadside performance is, and they take that into consideration when they're calculating your risk. However, one thing, I've always tried to do is when I do actually talk to an underwriter is ask them what they're specifically looking at on the CAB. And in most cases, the underwriters tell me that all that they were ever taught was that yellow and red are bad. They don't know what goes into it. They don't know what calculates this information. They just know that doesn't look good. So one of the things that we do here at RWR and Keystone is we try to look at that. And if you do have bad numbers, see if there's anything that we could do to fix that right off the bat without actually doing any service. One of the things that you guys could do is check your mileage. Mileage is part of the algorithm that constitutes unsafe driving and crash indicator. So if, let's just say you have, like I'll give you an example. I had a company that I worked with that only had 50 miles reported because they just didn't know what they were doing on it. In reality, they had 2.5 million miles. So obviously that's a humongous difference, even to the point where the underwriter reached out to me and thought that we were trying to fib on the report. But in reality, it was just legitimate numbers. So those are the type of things you need to be looking at. If you guys do have crashes on your report, an easy way to remember a reportable crash, I always say, is nurse, hearse, or tow. Nurse meaning if there's any medical involved, hearse if there's a fatality, or tow if there's any towaway involved with any vehicle in the accident. That will automatically end up on this report against your crash indicator. Now, where you could take it a step further and where Tim and I have seen a lot of success with other companies is if you're not actually at fault, and the way the FMCSA it says that it's deemed not preventable, meaning there was nothing your driver could have done to prevent that accident. They base it off of the police report. They review that police report. And if they come to that conclusion, they could actually remove it from your score. So it'd still show up on your profile as an accident, but it would be removed from the calculation. So anything over here on the right-hand side that calculates your scores is going to then calculate your ISS score. And the ISS score is from 1 to 100, 100 being the worst. And this tells the officers of what type of inspections to do on your vehicle. So from an underwriting perspective, they really want to see a 49 and below, which is the pass phase. So, part of the services we offer here, feel free to reach out to us. We could pull your cab report and we could do a high level review for you, just to give you an idea of what we're seeing from a high level. Okay, so now more and more, and even some carriers I've talked to are now going to almost like, I'm sure a lot of you have seen the Progressive commercial where they have that plug and play. Basically, you plug in your car and they're basing premium based off of the driving. So some commercial auto is actually going that direction. It's slowly going that direction, but in time, I see a lot of people using that. Because what does it tell the insurance company? It tells them exactly what type of drivers you have in real time. So nowadays, back in the day, used to be a check mark on your supplement that you said, yeah, I have cameras or I have GPS. And that was a great story to tell your underwriter. Nowadays, it's okay, great, you have it, but what are you doing with it? And you need to show me what you're doing with it so I actually know that you're telling the truth. So, a lot of companies we talk to, there's a lot of data that comes through this. And typically what happens is a lot of people wear more than one hat, and this takes a back seat. So I've had somebody just recently told me that their drivers, this wasn't a school bus company, but I had a trucking company tell me that their drivers, they have it set, I think it was for 10 miles an hour or over, and she consistently gets alerts every day, and she doesn't have time to look at it, so she just doesn't even look at it. Now, that sounds terrible. So, we need to be basically looking at the information you're getting because it's really good information, and it is proactive. Anything you're looking at from the GPS or camera standpoint is the proactive approach because it's telling you there's an issue without obviously an incident or accident occurring. And then we could work with that driver. We could, coach the driver. A lot of times I see incentives helping, but more importantly is discipline. Especially if the FMCSA comes in, typically they're going to ask for your discipline policy. But if you're a driver and you consistently have, harsh braking, speeding events, harsh turns, whatever it may be, distracted driving, talking on the cell phone, we need to make sure that we're actually doing something about that and documenting it. In the event, heaven forbid, that there is some sort of high profile accident, they could subpoena your information that you have within your telematics and technology in general. And if they see that John Smith consistently had speeding, consistently had, whatever it may be, and we did nothing about it, it would be a problem. So we need to make sure that we're looking at that information and documenting what we're doing with it. Keystone does offer a service where we kind of do that on behalf of a client. So once again, everybody interested in could talk to us about that later. Selecting drivers. I think everybody on this call at this point probably does a great job at selecting your drivers. One of the things the carriers want to know is advising the percentage. How many van drivers do we have versus actual CDL drivers? CDL obviously is held to a little bit of a different standard because of all the federal requirements that you have to do, state and federal really. So they look at those drivers a little different than your van drivers. But once again, as Tim said earlier, if we could kind of show that we're doing the same types of things even though it's not required per the FMCSA, we are still doing trainings, whether that's a PowerPoint or video. We're taking them in the vehicle. We're doing an actual hands-on practical exam with them. And then the big thing, obviously, is your clean MVR. Pulling the MVR is obviously by the carrier and is something that they do. Now, like Tim as your agent could reach out and say, John Smith can drive or John Smith can't drive. But what Tim can't do is actually share that MVR with you. So we should be pulling our own MVRs and reviewing those. And you have to do that actually for your DOT drivers anyway. So anybody that has a CDL, we need to do it initially upon hire and annually thereafter. But basically what you want to do is something like this. So if we could show a carrier that we actually have true criteria that we're pulling, when we do actually pull an MVR, that there's true criteria that we're reviewing it against, and that we could share that with the carrier. Once again, put yourself in that underwriter's shoes. It gives you a little bit of ease there that, look, we're really not hiring anybody that has more than 2 minor violations in the past 3 years, or, any sort of at-fault accidents. We're not hiring them. All this criteria, what we try to make this is to try to make it uniform, that most carriers like this criteria. But if you're working with a certain carrier right now, we could always look at that, and what we should at least adopt what they have or more stringent. Once again, this is just a good practice to have. Typically, this is part of your fleet management policy that they would actually sign off on. So this isn't a big surprise to your drivers. They know that obviously this is for their personal life and at work, any sort of violations they would get. And then they sign off on it too. And once again, something great that you could share with an underwriter that separates you from other people. So I mentioned the very beginning of everything that you guys do, basically, which is a lot. And I know that because I've dealt with a lot of you guys before. So since you are already doing that, we just need to make sure that those attributes are known to the carriers. So, you probably have a safety manual. So we want to probably send a copy of the safety manual that you have. An employee handbook. Obviously, this is everything from that we mentioned earlier, like a discipline policy. That's typically where you'll find something like that. If you do have technology, what's the technology and how are you using it? Is there any trends that you could pull out of that technology to basically share with the underwriter to show good performance over a period of time? Hiring practices, once again, I know it's very rigorous of what you guys do for hiring somebody to drive a bus or a van. So once again, share those things that you're doing. And then financials, and then obviously the results. If we could actually put that data into readable data to give to them, it's going to, once again, separate you from everybody else. So this here, I wanted to kind of show to you guys, because now, what I do in my job is actually work with agents and clients specifically on commercial auto. So, really starting to understand of what an underwriter wants to see. Aside from your safety program, a lot of times what they want to see is a fleet safety written manual. And if you could see here on the table of contents, these are the kind of things that are actually within it. So it's very specific to driving. The MVR matrix is in here. Obviously, their drug and alcohol, talks about their MVRs, their eligibility, all that kind of stuff. Cell phone policies. I know it should go without saying we shouldn't be without our cell phone, but once again, if we have a written policy that the driver signed off on, it just takes you a step further. So this is something really good that is a good thing to give in with submission. And once again, if you don't have something like this, please reach out to us and we'd be happy to help. More and more what we're seeing from an underwriting perspective is they're sending out loss control reps, and what they're asking for is driver qualification files to see if you're actually in compliance with that. So I'm not going to read every single one of these things for you, but obviously from a driver qualification file standpoint, that's anybody that drives a commercial motor vehicle. So, obviously CDL drivers, the only difference for those people is that you would have drug and alcohol basically in the licensing. Everybody else would be held to the same standard. So make sure that we have these things in place, have a good checklist, make sure like things that you're supposed to do on an annual basis we're doing, such as the MVRs, your annual queries to the clearinghouse, all that good stuff. The one thing I know that's always a big issue that people, it's hard for bus drivers, but is the multiple employer checklist. If they have more than one job, we probably should know that so that they stay under the hours of service rules. Now, a lot of you guys get a big exemption, but for those of you that have motor coach or do extracurriculars or weddings or whatever it may be, those are really the people that would affect more so than anybody. Okay, now this is kind of something that I learned as of recently because a client reached out to me, a school bus company, that said, why do I continuously get audited? And it is pretty strange. I was confused myself. I mean, there was like a 5-year period that they got audited 3 different times, or a 6-year period that they got audited 3 different times. So basically, I looked into it and I called some people I knew just to see. Now, this is basically what I came down to, and it makes a lot of sense. So I think it was 2012 during the Obama administration that they put something in place called MAP 21. And this is something that was $105 billion in funding. And the purpose of it was for the FMCSA to basically get out there and look at the transportation companies across the United States from a safety end. You know, when the auditors come in, they're looking at it mostly from a safety end. But what happened was they quickly found out that it was way too much for them to handle. They didn't have enough people to handle it. So they actually started cutting back on things that they would look at within the act. So what they decided to do in the beginning, school bus companies were a part of this. They actually ended up removing school bus companies. And what what it actually is they have to look at your company at least every 3 years. But what we've seen recently is a kind of an uptick in it. And the reason why that they're looking at this company I was talking about in particular was because they had a motor coach, and I think they only have one or maybe two on the same DOT number as their school bus companies. So what that means is they actually get looped into this MAP 21. So it's something to think about. You know, if you don't want to get audited every 3 years and you have some motor coaches on your DOT number, it might be something to discuss, you know, with your agent to see about possibly separating it out to avoid an audit. The other thing I heard from a few people, and, you know, I guess this would be a little bit of hearsay, but it makes sense, is that Doge was actually in the FMCSA. And now they're really pushing these audits because they do not want to lose the funding. So once again, just something to kind of talk or think about. And if you did want to discuss more, you know, please reach out to Tim and I, and we'd love to discuss it with you. So to kind of wrap this up, you know, we keep on talking about telling the story. You know, the biggest thing that you don't want to do is fluff. And I don't think that we have much fluff that you guys are doing. There's a lot of legitimate background checks and, like I said, a lot of stuff that you guys do for the hiring practice, but it's really just compiling all that and being able to truly tell the story to your underwriter. You know, your CAB scores over time. Did they start somewhere and we could actually show a trend in a downward position? Some of the things, like I mentioned earlier, is true data from your telematics. You know, this, I know you can't see this, but this shows a driver score from an 850 to a 950 over a 3-month period. And that's because the company basically got involved with us when we actually started looking at all the data. And there's different ways that we look at that data. You know, we can, like I said, incentivize the drivers. We hang up the driver scores in areas where the drivers congregate so that it's friendly competition between the drivers. But once again, putting yourself in that underwriter's shoes, this is great information for me to see over the last 3 months that we actually rose 100 points per driver on average score. Down here shows speeding. And if you see this is 0.01% of speed time. And this is basically the same thing over a 3-month period. Basically, it shows 11 minutes of speed time and over 3,000 hours on the road. Once again, not fluff, some legitimate data that you could show to that underwriter that makes them feel better about taking you on as a risk. And that's kind of like, once again, bringing this back into the fold. That's what's going to put you on that left side of that bell curve. And hopefully, number one, they're taking a chance on us. And hopefully, you know, some premium relief and things like that. Best we can, obviously, with the hard market.
Mike, before you finish this up, I just want to add something. Yeah. When we're telling this story back, you know, on this slide here, when we're telling this story to an underwriter, sometimes it's not just about getting you the best pricing. Sometimes it's just getting a company to look, right, to take a chance or to underwrite this account the way we believe. Because so many times we're told because there are underwriter shortages, just like there are driver shortages. And what we hear is they're going to do a quick CAB review and a quick Google search. And if there's something they see they don't like, they're done. And that's unfortunate, but that's the way it is. So when we're telling this story, sometimes it's getting to just keep the file open. Let's keep going down this road, because at the end of the day, turns out it's a really good account and they just missed an opportunity. So by telling this story, we're not only looking for the best pricing, we're also looking for opportunities for this company to work with a really good customer. And when we tell this story, that's what we see. Sorry about that, Mike. Just
No, you're good. And then lastly, just something I want to bring up is partnerships. Keystone has two partnerships, one with Fully Services, and the other one with GPS Insight, which Fully Services, I believe now is a vendor of NSTA. I'm pretty sure actually. And then GPS Insight's a technology company with cameras and GPS. So the things that we basically did with them is we negotiated specific rates. We got dedicated customer service reps from each company. And then we also, as another layer, if you would want it, we have dedicated reps from RWR Keystone that would actually facilitate, review all this information on your behalf. So once again, just wanted to point that out. If you're interested in any of that, please reach out to Tim or I. And lastly, just here's our email addresses. Once again, you have any information, you can reach out to Kurt, Gabby, Tim, or myself. Any questions?
Thanks so much, Tim and Mike. This is a great presentation. A lot of good, useful information. Tim, I'll start off with a question for you,
Sure.
and it centers around the non-CDL drug and alcohol testing. And you refer to that to have a drug testing program, for your non-CDL drivers. I think there are two things or three things I just want to get clarified. One is that it would have to be a separate drug testing program than your CDL drivers who are going in the drug and alcohol clearinghouse. So the contractor would have to actually set up a second different program for that, correct?
Correct. And Mike, you probably can answer that a little
Yeah,
bit
so that would
faster
actually be a
than I can.
non-DOT program because you cannot, if the FMCSA came in and seen that you're rolling everybody in under your DOT, that'd be a problem.
Yeah. So they're not going to go in the drug and alcohol clearinghouse. So then the question becomes like, who's gonna maintain that information? The test information.
So that would just be internal. One thing that's kind of strange from a DOT perspective, FMCSA, the DOT drug and alcohol program is universal, right? Everybody has to adopt it that has a CDL. And what it is, it's a 5-panel in alcohol. Non-DOT is actually 10-panel plus alcohol. So you're actually looking for more stuff. But I've been through several audits. What's weird about it is the FMCSA does not care about those non-DOT drug and alcohol. This is more from a carrier standpoint.
Right.
They want nothing to do with that. So basically, you would hold on to it internally. You could have a written program probably in your employee handbook that basically outlines the non-DOT piece of it. Nothing would get put into the clearinghouse or anything like that. It would just be your own thing. But then what we could do is go to the carrier and show that we're even holding those standards for our non-CDL drivers as well as our CDL drivers.
Okay. And so is this, Mike, something that the carriers are specifically looking for?
Yeah. Yep, definitely. It's for the van drivers specifically. Yes.
Okay.
And what they come back and say, Kurt, is, hey, these drivers aren't as vetted fully as a CDL driver. So to them that they feels problematic. And we thought, well, that's address that issue and adopt a procedure for that.
Right. Okay. I am not seeing any.
Somebody did ask if it was going to be recorded, which it is going to be recorded.
Yeah.
And Kurt, where is that available at?
Yeah, so all our webinars are available in a tape, videotape format. It goes behind what at least I call the member paywall. So you'd have to have a specific login information to the NSTA website to gain access to that. Now, for everyone who is an NSTA member, any number of people within your company can get a member login. Just remember that. So it's not just exclusive to one primary contact for our contractors. Anybody who's an NSTA member who wishes to get access to that can just contact Gabby or send us an email at info@yellowbuses.org to get access to all our webinars, including this one.
I see too, somebody said for the separate program, does that include pre-employment? Definitely. I mean, think about once again of the commodity that they're carrying. I mean, we wouldn't want to, if you do a pre-employment, it's going to give you yourself ease beyond just the carrier, that this is a clean person that's going to be driving kids around. So my suggestion would be pre-employment, reasonable suspicion, and random.
Okay. No, appreciate that. I don't see any other questions in the chat box, but I will and we're actually bumping up against the hour, so I think the timing's been great on this. So I'm going to bounce it back to you, Tim, and then over to Mike for any final comments, any things you want to amplify in terms of the presentation.
Sure. Thank you. And thanks everybody for listening in today. I think it's just important. The message we wanted to convey is the market is hard. Are there ways that we can work with that or fight it? Yes, I think they are. Mike and I are working on, just as a teaser, a new product that we're going to offer. It's going to be a landing page with some resources that are going to help contractors further improve their safety, improve their handbooks as an HR arm. Mike, if you want to give a little more information on that or a higher level, what we have in the works.
Yeah, it's basically a safety toolkit. It's going to be a landing page that's specific to RWR insureds. Some of the things that's going to be on it or any of the webinars we do. We're going to start offering our own certain webinars. We're going to have a place on there where you could actually request certain things that you would like to see in there. But the things that we're going to start off with are going to be like the fleet policy we went over today. We would have a template in there. Once again, we know what the underwriters want to see, so we'll have a template in there for you, including the MVR matrix, the driver intervention form. We'll have an accident investigation sheet on there for you, several different safety talks that apply obviously to a school bus company. We plan on putting a template safety manual on there, once again, directed specific to school bus contractors. Some things people don't think about that should be in those things would be like garage programs. Beyond, we always think about driver, but you guys have employees that probably work in your garage, like mechanics and all that kind of stuff. So we try to put programs in there that is directly related to them. And it's going to be something that grows over time. We're going to start off, we have a pretty good idea of what we want to get in there. One of the other things that's going to be pretty nice is that you'll have access to a helpline that will give you access to HR, safety, claims, and DOT fleet professionals out of our risk management division. So it's not a call center or anything like that. We have 60 people in our risk management division. It goes to those people. So most likely you would get connected with somebody that you would talk to on a regular basis. I had somebody recently tell me they were paying $250 an hour for an employment attorney. Obviously, we have an employment attorney on staff, and those are one of the people that work in our HR group. So coming very soon.
All right. Once again, thank you to Tim Weaverling, Mike Kuiros, our partners at RWR Keystone Insurers Group. Just want you to make sure that you're saving the dates for our midwinter meeting that'll be coming up January 18th through the 21st. That's in Fort Lauderdale this year. So appreciate everybody tuning into the webinar. Thanks to our great panelists. And remember, with NSTA, you never travel alone. So have a great day, everyone.
Thanks, everybody.